Hello day traders. Last week the US dollar index continued strengthening while the US stock prices remained almost unchanged. The results of the regular Fed meeting have contributed to such dynamics. The week started in a more negative way. On Monday, the stock indices and the US dollar index fell. No economic data were released. Market participants booked profits after the continuous growth in previous days. The probability of the Fed interest rate hike has reached 100%, and this event was already priced in. On Tuesday again, no significant economic data came out in the US, but currency and stock indices slightly rose. The S&P 500 reached the price-earnings ratio of 17.7 for 12 months. It is markedly higher than the average level over the last 10 years of 14.7. Some investors believe that the US stocks may be overvalued. On Wednesday, the long-awaited increase in the federal funds rate by 0.25 percentage points took place at the regular Fed meeting, from 0.50% to 0.75%. Besides, the US regulator announced that the rates may be increased 3 times in 2017. This surprised investors. One of the conditions for rate hikes is the low core inflation. Actually, it was already 2.1% in November in annual terms, which is above the target level of 2%. Respectively, the dynamics of consumer price index is not in favor of the further monetary policy tightening, but nevertheless, this is what the Fed announced. This triggered the strong rise of the dollar index and moderate fall of the US stocks, as the rate hike is considered to increase corporate credit burden. Note that besides the Fed meeting, weak data on retail sales and industrial production were released on Wednesday. They became an additional negative for the US stock market. Let's recall that the next Fed meeting is expected on February 1, 2017. On Thursday, significant data on inflation for November were released. The main figures coincided with forecasts and indicators for October. Thus, the impact on markets was minimal. The dollar index continued soaring to update its 14-year high. Stock prices continued fluctuations in neutral range. On Friday, weak data on the US real estate market came out. They did not affect the stock market, which continued moving sideways, but caused a small downside correction of the dollar index. This week, significant economic data will be released on Thursday and Friday. Firstly, the GDP for the third quarter in the third reading, durable goods orders and personal spending for November will come out. On Friday, the real estate market figures and the University of Michigan Consumer Confidence Index will be released in the final reading. In our opinion, preliminary forecasts are neutral, but if the real data are markedly different, the markets will react with strong movement. Note that on Monday there will be a day off in the US due to the Christmas holiday. Happy trading and see you next week.